Hello, here we go again, and today, or in this example, in this recent market move, there's a very good example and a good lesson to be learned here, which I didn't want to miss. So Euros Swiss franc here, 4-hour chart, and you can see here's a very interesting scenario building up. We have a very strong support area. You can see multiple support areas, and now it looks like the price is ready to break it, but it's also showing a rejection, and in between the candles you can see it's still 1 hour to go. Price moved up and down a lot, so this is an area where many amateur traders will get caught on the wrong foot. This will look like when especially it is going down, many amateurs will think, wow, this is looking like a great breakout. My FOMO is acting here, so I better get into this trade right now or I'm going to miss it. And then they will somewhere around here short this market, maybe on the lower time frames, and then you can see the price is going up very strongly in between the candles or during the candle, and they will get squeezed out of their trades. They will start doubting their trades. They will say, oh wow, is this again a fake breakout? Maybe I was too early again, I knew it. And this is something that happens very often, and especially on those markets where you have such a good support and resistance, where it's very obvious. There's the old saying in trading, it's especially true, when something is too good to be true, then it usually is, and this is applies to support and resistance trading. So one thing that I always recommend to our students when I mentor a trader is that one of the easiest ways to handle such a situation is always wait for the candle to be closed. Usually end of day traders know this, so if you are on the daily chart, you only enter trades on the end of your day and you don't do anything in between or during the day. This is a great noise filter, and this can also be applied to intraday traders. So let's say we are here on the 4-hour chart, we trade the 4-hour, we only enter or make trading decisions, whatever it is, entering trades, exiting trades, adding to a trade, scaling in or scaling out, moving a stop or adjusting a take profit. We only do such things when the candle is closed, and we don't do anything in between. This sounds very basic and very simple, and what is the goal? The goal is very simple. The goal is to avoid noise, to reduce the noise in your trading. Of course, sometimes you will miss a trade where the price just drops in one straight line, but it's not very often the case. And we also have to think, what is the positive effect? What are the benefits? The benefits are that you are not get caught in those failed breakouts, those fake breakouts, because it easily gets out of control. It spirals downwards, where you then have a trade where you actually knew you should not be in, you entered too early. This creates a lot of emotional problems, and then on the next trade you are scared again, or maybe you push your luck, you want to make up for the loss, then you get in too early, and then it goes completely out of control, where you make one bad trading decision after the other. Maybe you start revenge trading, and then at the end of the day you're looking at your trading account and wondering how you could have lost so much, and it just started with one bad trading decision. So really have to make sure that we are protecting our downside. Playing good defense is more important in trading, especially if you are new and inexperienced, than playing great offense. If we are able to control and manage our downside, protect our mental capital, then the good trades will easily take care of themselves, and we have to make sure that we can stay out of such bad trades. And the candle close rule, although it does sound simple, it is so important. Here was another good example. So we had this we had a few confluence factors. So we had here, for example, a trend line, and then also here a support and resistance, and you can see that it does look price is making lower highs. We have a break of the trend line, and then you can see what happens here. It does look very obvious. Wow, the price is selling off, especially when we look at those long candles. Here you can see here in the middle of the candle, the price was already here trading at the lows, and then it looks like to the amateurs that the price is breaking out. They're missing the trade, so they will jump on this trade somewhere around here, trading the lows, shorting the lows. And then what are the professionals doing? Of course, they know what is happening here. The amateurs are getting in too early. Then they drive the price back up. They are scaring out the amateurs. Often you will also see stop runs and stop squeezes. So this is what happens here. Then the amateurs get scared out, they're leaving the market, and then once this volatility is settled down, you can see once we really actually see a break of a previous support and resistance, which happens around here, then you actually get the follow through. But in the meantime, you can see lots of up and down, lots of intraday volatility. and nothing really happens. It is where the amateurs lose all their money, where they also lose all their emotional capital, and then this is a very, very bad way of approaching your trading. So even though it sounds simple, give it a try. Apply the candle close technique to your own trading, and I'm sure you will see quickly the benefits, especially if you're having problems with being impatient, with having emotional problems, then this can be a great way. And regardless of how this plays out now, if it closes below that, then it can signal here maybe a trade for you, depending on how you trade. But this is not the point of this analysis. The point is that intraday or intra-candle, there are a lot of people who react emotionally, who react reactionary, impulsive. They will always short and exit their trades, and then they will lose a lot of money in this little area here without waiting for the real signal. So try to reduce noise as much as possible in your trading, and I'm sure you will see the benefits.